right, all right. We are live on Tuesday. Of course, it's your key team. I'm Kayla McDonald with Remax Alliance Group, and we have Miss Lindsay Weber with Keystone Mortgage Solutions.
Hello, hello.
So today we have a couple things that we just want to talk about. We're not going to spend too much time on one topic or subject or the other, but we're going to touch on hometown heroes, more Lindsay than myself, some down payment assistance programs, especially with the county. And then what else did we say we wanted to talk about? I wanted to touch on mortgage assumptions just a little bit because I've been seeing them a lot more lately. And then what else did we say that we wanted to talk about?
Preparing to sell your house with the upcoming settlement for NAR.
Yep, selling and buying. So we're going to touch on a couple different things today. And
my mini refi boom.
Yes. So we got a lot of stuff to cover, and again, we won't spend too much time on one or the other, but if anybody is watching live, has any questions about anything, just type away and in the comments, and then we will answer them.
Sounds good.
Lindsay, do you know how much funds we have left for the hometown heroes?
So it changes often. The last that I read was like 55 million.
Okay.
So, and what ends up happening, and it's really hard to determine exactly how much that is left. And the reason being is because some of the money is reserved and there's no extensions. So when you lock and you reserve that money, you basically have to use it or
you lose it.
Or you lose it and you have to start over again type of thing. Because you can't go in and you're not able to extend that lock. I think you're able to relock, but as soon as that lock expires, those funds basically go back into the available pool as well.
Right. So it's kind of like one of these, like it goes up and down a little bit. Yeah. As what if something falls through or you need to do an extension or whatnot. So
right. Well, then we get to the end, we'll call it, like where we have a certain amount of money left and they stop it. And then they let a little bit of time go by and they say, okay, we have blah, 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 I'm out of money. And everybody jumps on the bandwagon again to try to reserve this money.
Yeah.
So it's hard to determine. But the last that I read, 55 million, basically in a nutshell.
Still a lot of money out there.
Yeah.
But
and it goes fast.
It does.
We might get through
3 days, right?
Huh?
It's been 23 days since it was released, right?
Yeah.
That's a lot. I mean, 45 million, 45 million in less than a month.
Oh, yeah. So that's what I was saying. Like by the end of August, it might be gone. So now's the opportunity to be able to take advantage of that. And I'm just going to give some bullet points. And if you need more information or want to talk further, I'll be glad to help with all of those questions that you have, because there's a lot more involved than just the bullet points that I'll read off. But basically, you must be a first-time home buyer. The definition of first-time home buyer is that you haven't owned a home in the last 3 years. So if you sold a house 5 years ago, you're considered a first-time home buyer, not only in this program, but many others as well. You must be a full-time employee, which is essentially 35 hours, working in a Florida-based employer. So since COVID, we see a lot of people that work from home. I do quite a few transactions where the borrower still works, we'll say in, I don't know, New York comes to mind, but they're living here in Florida. So unfortunately, they wouldn't qualify for this particular program because their employer is not a Florida-based employer. Minimum 640 credit score. If anybody needs help getting their credit score to that 640 range, I'm glad to help with that, trying to get your scores up if that's an issue. If you don't qualify for this because you don't have a 640, but there's other programs that are available that are not don't have any school-driven requirements. The household income can't earn more than 150% of the area that you're moving to's median income. Roughly, I'll explain what that means. Basically, anybody that's employed in the home that's going to be living in the house for, we'll call it our area, Central Florida, we'll call it. Basically, the income for the home can't exceed 131,000 and change, 131.7, I think, which is pretty decent amount of money. So they're not like restricting a whole lot. And then for the program itself, the mortgage company themselves have to be approved to be able to do the program. So they're kind of like my bullet points of the Hometown Heroes program that is currently available.
And then there's other down payment assistance programs out there.
There are. So again, just because we're in this area, we'll say Pasco County. So Pasco County itself has a down payment assistance program. The last time that I looked last week, they still had funds. And again, they go fast and then they reallocate, and it kind of comes and goes, kind of like on a roller coaster. But they've made a lot of changes to the Pasco County down payment assistance program itself. They've increased our purchase prices. They've increased the amount that they're giving. They've changed the way that the repayment works. What else did they change? There's some guideline changes. They've come into this century, and we're able to upload our documents. That's been a while now, but there was a time where we literally had to print out hundreds and hundreds of pages and hand deliver them or overnight them to the office and have them stamped as being received. And like it was archaic. We'll say that. So we have a nice new program that we're able to use, and we can upload all of the documents directly into their portal, which is a time saver and a half. We still have a waiting period. And what I mean by waiting period for the check, I guess that the checks aren't in their local offices. So they request a check. That check is then delivered to our local office. And then the title company or the lender is able to go and pick it up. The borrower can't do that, but here nor there. So for Pasco County, I'll speak of Pasco County since that's the one that we're most familiar with. And in this particular area, there are others in different counties that are similar. And if you're interested in that, just let me know. I'll gladly get all the information. I have many different sources from different areas. But basically, our purchase prices can exceed $330,000, which was increased from $275,000. And Kayla can firsthand tell us that finding a home for $275,000 last year that were not manufactured homes or properties
qualified.
Right. It was really difficult, very difficult. So they've increased it to $330,000. It's got to be a single family home. It can be a condo, it can be a townhouse. No manufactured homes, no mobile homes, no flood zones, and no properties that have had any kind of sinkhole activity. So even if you find a home that has been remediated, that unfortunately won't qualify for Pasco County's SHIP money. It is income based. It is income based again on all of the people in the home. So if you're a family that is buying a house and your mom or your child is of age to make money, or anybody that's in that particular home, their income does need to be disclosed, not on the loan side, the mortgage side, but on the down payment assistance. And then it is qualified off of that area's median income. It's a 0% interest based off 30-year term, and it is recorded as a second mortgage. If you do refinance, you sell anything within that, say, we'll put it this way, the lots of ins and outs, within those first, we'll call it 5 years, which I'll get into why in just a minute. then more than likely that amount is repayable, meaning that you have to pay off that second lien. Now, most recently, what I've noticed is that their repayment plans, based on the amount of tiered income that you make, has changed. So if you have low or very low income based on the amount of people that are in your home and how much money that you're receiving, that loan is deferred for 5 years and then has the ability to be forgiven. I don't know all of the rules of how it can be forgiven, but I know a big one is that you're on time with your first mortgage payment in order for that second lien to be forgiven. The moderate one is also deferred for 5 years, but if you're in that moderate income tier, then your payments then become due after those first 5 years. And I had it pulled up because I couldn't, for the life of me, remember the amount of payment after those 5 years. So I'll look it up real quick. The Pasco County website is actually really easy to navigate. It's basically just pascocountyflorida.net, and you can click on the down payment assistance program. So if after it's deferred for those first 5 years, it has $116.67 monthly payment for the remaining 25 years. Maximum assistance, like if you're in very low income, they're giving $65,000. Low income is $50,000 and moderate income is $35,000. And then they have minimum contributions that can be met in many different ways. So your minimum contribution is basically the money that's out of your pocket. Appraisals, inspections, as long as you can prove that you've paid them. Earnest money deposit accounts. So it ranges anywhere between $500 and $1,500 because these amounts, if it's structured properly, basically will be your down payment and your closing cost that you can, they have no money down at closing, not just down payment, $0 to the table. And the same thing with Hometown Heroes, that can be structured that way as well.
Yeah, depending on the house and, where everything, how everything is structured. So that's pretty exciting stuff because I know that a lot of people are having a hard time, saving with inflation and everything and just coming up with a, 30,000 plus for down payment and everything. So it's a lot.
Yeah. I mean, if you do a quick calculation of just regular, we'll say FHA loan. So if you're using a purchase price of $330,000, just because that's what the cap is for Pasco County, and your required minimum investment for an FHA loan would be $11,550. That's not including your closing cost.
Right.
So you pretty much would double that amount that you'd have to bring to the table, down payment plus your closing cost. And that's not like the end all be all. There's other ways to be able to help with closing cost, help with monthly payment, down payment assistance. So there, like I said, there's a lot of lots of ins and outs. So it's easier to have a conversation with the borrower saying, this is my circumstance, and figure out the best plan of action for that specific scenario. Right. A lot comes into play.
Yeah. Which, since we're talking about numbers and things, it kind of leads into the whole NAR settlement and everything. And sure. I actually had a conversation with a buyer yesterday, and they're a first-time home buyer, and they've heard about things with NAR, and she's like, okay, I'm not ready to buy now, but I want to be prepared, especially with this coming into play. Like, what's it about? I've read a lot of things, like what's actually happening. And I know that we've talked about it a couple times already. Yeah. And we got to say, there's a lot of headlines out there and a lot of things that are being said and a lot of ways different agents are marketing. So, with these changes coming into effect on August 17th, buyers are going to have to enter into an agreement with their buyer's agent, whether it is just a, per showing, they have to sign something that, enters them into some sort of contractual agreement with their agent. So as a seller or as a listing agent, You cannot advertise if there is going to be a cooperative compensation for, or a co-broke compensation in MLS. Doesn't mean that it is 100% the buyer's responsibility to pay. It doesn't mean that they're not allowed to, or there's a new
That's
rule.
the biggest misconception.
Yeah.
Is that they think that that process has changed, and that process has not changed.
No, it's still the same.
Pays the realtor compensation, and the realtors on both sides typically negotiate of whatever that fee is going, however that fee is going to be split. And correct me if I'm wrong, because I'm not a realtor.
So there's never been on my side as a buyer's agent, I've never gone to a seller and saw, oh, you're offering, let's just say it was like 1%, because that's been an offer of compensation. I've seen an MLS. I've seen 3%. I've seen $5,000. I've seen $2,500. I've seen so many different variations depending on whatever that agent, is offering based on what they negotiated with the seller for their compensation. So, I've never had a seller say, oh, I don't want you to pay the buyer's agent. I don't want you to pay them this much or this little. It was something that was disclosed, like how much. So here's my fee. This is how much I'm going to offer to a buyer's agent if they bring the buyer, and then so on and so forth. So that's how that's always been. If for whatever reason, as an agent, you are taking a lower commission or compensation for yourself, and you don't want to offer it to the buyer's agent, then that's on you. But it's always been negotiated, and I feel like I've seen MLS was only requiring you to put into their little box $1 before. Now that's going away. So really the listing agent had all the power to for payment to the buyer's agent. But with all that being said, as a buyer, this conversation went yesterday. I said, yes, is it a possibility that we could come across a house whenever you go to purchase that, either the seller's agent or the seller, doesn't want to offer that compensation? It's possible. Yes.
Right.
So whatever we agree upon, for payment, before we go out, that's going to be in the agreement. But they can also tell me as a buyer, they can also say, hey, you know what, Kayla, I just really don't have the money to pay your, your fee. So don't take me to those houses because I don't want to get my hopes up. So, they can put that in an agreement as well. It's like any other contract. You can put any type of term in there. And then also, I think what a lot of people will end up doing is the buyers will end up asking for concessions in order to help them pay for whatever their agreed upon amount is with their agent. And I believe the different loan programs have increased their concession amounts in order to compensate for that in the event that they need help paying not only their closing costs, but then they need help paying the real estate agent as well. So, that's something to, just be prepared for and take into consideration as a buyer. What I think is going to happen, and I've said it before, is I think that a lot of sellers are still going to, see value in their agents and see value in offering compensation to a buyer's agent. I feel that there's value in that as a listing agent. I do both sides.
In itself didn't really, that's the crazy part, is that in itself didn't change. Like there was there was no rule in place to begin with. It was, I'll call it an assumative type of rule, but like nothing really in that part, in my opinion, has changed. And the thing that everybody's making it like as if that's now etched in stone and that's the change that's been made. That's not the change that's been made.
Yeah. It's just we can't advertise it publicly on MLS, and then the buyers have to enter into it.
I can pick up the phone and say, hey, Kayla, what's the buyer's agent comp on this house that you're listing? I have buyers that are interested, right? It just can't be on MLS.
Oh yeah, you can call me as a listing agent and be like, hey, before I would like to show this property. I just want to know if you're offering any compensation,
Mhm.
or it can be a text message, and they could say yes or no.
But it can be
It's
on your
gonna be,
website, so to speak. Like,
yep,
just
we can
can't
put
be
it.
on
We can put it
MLS.
elsewhere. As of now, we know that we can put it like on our website,
Mhm.
or nothing that's linked to MLS though. Like, so if there's
Sure,
anything
sure,
that
sure.
we can't put a link in MLS and then go to our site and then it's there, we can't do that.
Mhm.
But MLS just does not want us to advertise it on there. For it's kind of silly, but it is what it is. But I think we'll go through an interesting period, at least over the next 6 months, where
There's
we're going to have
always changes.
a lot of agents are going to be trying to win listings, and we have those already. We have discount brokerages out there,
Yeah.
and we have discount businesses all over in every industry. So it's just going to be I think people will end up realizing, like, hey, I'm going to actually pay for a good agent, a good quality
I
agent,
was
not
gonna say,
somebody
you
that's
get what you pay for sure. We all know that. We
yep.
1000% know that. And if you haven't experienced that, then good for you. But for the most
Mhm.
part, when you're trying to save a buck, um, a lot of times it backfires, and it backfires fast.
Yeah. I mean, I don't know what the terms were. I had a new listing recently that listed with like one of those, like, I guess I call them corporate, agencies, where you get somebody that's, who knows, like from like Miami, or they might even live in Georgia, but they have a Florida license, and they have like people that come out and do the pictures and install a sign and whatnot. They had their listing expired with that agent, and then they called me before it, and they're like, hey, we really need to sell our house, yada yada yada. Thankfully, I was able to take a look at the house, and I actually kind of like those better because I could look at it, I could already see the house before I go there, and I'm like, okay, like, i I can actually give you what I think that you should have listed your house for, and I'm sorry, but you listed way too high, and this is where I think you need to be. And your description just really doesn't describe your house or this area, and I don't know why they put all of this in there and they left these other things out. So they really weren't marketing your property to the best of its ability in the way that they should have been. So this said listing, we got it on the market literally the day after that it expired, and they didn't have a contract anymore. And I have to send the contract out to get some signatures. We got multiple offers on it and had multiple showings right away, and they were like in disbelief. They're like, I can't even believe this.
Well, I'm like kind of chuckling over here because it's so true. Like, if you have somebody that lives in a completely different state that's trying to sell a home, whatever, right here, the ideal realtor that you would want to hire, and that's what you're doing, you're hiring them to sell that house, you want them to know as much about the area as they possibly can. And you
Mhm.
can't possibly know about an area that you don't experience, at least on occasion, to know,
Mhm.
hey, where are your kids going to go to school? Where can we go to the grocery store? What types of homes are in this particular area? I mean, there's what's the traffic like? I mean,
Yeah.
there's so many things that you get the experience of living, or at least somewhere near the types of homes that you're selling, or like on a daily basis, or at least at some point in time. So you definitely get what you pay for, and you don't know, like, all of it's fictitious. They're Googling and trying to figure it out. And
Yeah.
that's not in your best interest to sell a home, in my opinion.
Well, even when you're like an hour and a half, 2 hours or more away and still in Florida, it's still,
Oh,
I travel for homes. I've gone outside that hour to hour and a half realm for certain clients. But it's not my majority. Like, I stay kind of within that like hour.
you have the ability to
Hour.
go and at least do your due diligence, and you can go
Yeah.
and you can physically see the house and meet people
Hmm.
there to take the pictures, and you can talk to people that are in the community, and if you're within a few hours of where it is. But when you're talking people that are different states, or everything's done online, I think you get a different result.
Yeah. Oh, 100% you do. So, but yeah, that's kind of like the NAR settlement statement in a little lump sum, I guess we want to call it. And then, prepping to buy or sell a house, with all of that, take those things into consideration. And again, like that conversation that I had yesterday, she's probably going to be giving you a call here soon because she's getting her ducks in a row. And she's like, okay, 6 months to a year. This is what I'm working on. This is what, I think that I need to do. And I said, okay, cool. You're on the right track. You need to talk to a lender. Yeah. So that way
we put a plan together, put them in place. Like if anything needs to be improved or
right.
Maybe they're having, some life event that they don't think is a big deal as far as the financing is concerned. And maybe on my side it is. So the best thing to do is to definitely have a conversation and to put a game plan in place, whether it's something you're buying now or in a year. And I have many clients that I'm working with as we go to, they're under a lease, and are they going to break the lease? Are they going to look for a home in the meantime? How long does the buying process take? How long does the mortgage loan itself take? And put all the timeline in place so they can plan their lives.
Well, and a lot of times, like they're going through major life changes, like they're getting married or they're getting divorced or they are switching careers or, they're trying to pay down their car payment because they think that's going to help. But maybe these couple credit cards over here might actually work in their benefit to focus on those, so there's so many different factors. And if you get them ahead of schedule and say, okay, these things are happening, well, this is what we need to do and how we need to navigate that, because what we think logically is going to be in our benefit when we're about to take out a mortgage might not be correct. So, so that way I'm like, I don't know all of it.
We paid it off and we closed it, and your score goes, no, just have the conversation. Yeah. Or like you brought up a good one. Somebody's going through a divorce. They're separated. And in the state of Florida, guess what? Like they don't acknowledge the fact that there's separation. Like we're a community property state. So if they're buying a house and they're not 100%, here's my signed paperwork of being divorced, that significant other that you're no longer with has to sign the paperwork at closing. And you need to make sure that they're on board. Sometimes it's not amicable, or you have to wait until everything's said and done. And a lot of people don't know that. They don't realize. They're like, what are you talking about? Or God forbid, like
no, we're not together.
Right.
Well, legally you are.
Right. Until the paperwork is signed in our state, they have to be there to sign. They have to agree.
Yeah.
It's interesting sometimes.
There's so many things about, I mean, I can't tell you how many more than you would think that, buyers that are they have moved on, live totally separate lives, have a new spouse, but they never legally divorced for one reason or the other. It's none of my business, but it kind of becomes a little bit of my business whoever the lender is on that, and the title company, when we go to close and we're like, hey, where is so-and-so? Because you're still legally married to this person and you're taking out this mortgage. They need to know about it and they need to be okay with it because that's going to be attached to them.
So that's why it's important to have a good team. I mean, like I have my routine of questions to be able to ask clients, and that's one of them. Like, Are you married? Are you divorced? What's your marital status? That's one of the questions on our application, but it's a conversation piece as well. However, the reason I brought up a team is because you're having that conversation, I'm having that conversation, and we're getting bits and pieces that might not have taken place. Like it might have taken place with you, but not with me.
Right.
For example, just the other day, you had a client, for some reason I didn't have in my notes of what their required monthly payment was. Well, they talked to you and told you what that was. And I'm like, looking at my pay, I'm like, I always ask, and I did not have it written down. So, I mean, like, you really have to have a good team, including title. Like, title, they should know whether that client is married. And then that title company needs to also communicate with all of us, letting us know that, hey, there's another party that's involved in this.
Yep.
Or the home is owned, and not just, okay, here's a 10-page title work, and for all of us to make sure that we read every line item, because there's, with our lenders today and the technology, there are times where I don't get a copy of that title work. Like I order it from the lender's portal and it gets emailed directly to that lender. And if I don't go in there and download it and acquire those documents myself and read them, I run the risk of not reading and knowing what's going on.
Yeah.
So do your due diligence and make sure that we have a good team put together that works together and communicates well. So I think that's key, especially in this crazy industry that we're in.
Yeah. Very, very crazy. Very, very crazy.
And to back up the payment that was expected, I was like, oh, well, we have to redo everything because that payment is not what I'm presenting.
Things.
Right. We need how much in down payment assistance?
Yeah. Yep. Exactly.
Yeah, it's important. So anyway, here nor there. Glad we caught it. Glad you caught it and told me.
Yep, exactly. That is what I'm like. I didn't hear that before. I wonder if Lindsay knows.
And by chance, like I was like, no. And I don't even have. I have like a checklist type of thing that I use.
Yeah,
and it's not on there. Something must have happened since we got sidetracked or talked about something else. I don't know. It's pretty funny.
Yeah, right. So, exactly.
I
think the last thing is the refi boom that you've been talking about that's right around the corner.
So I'm kind of excited about it because we're all anticipating interest rates to drop. All have our idea of what they think is going to happen with the market and the people that are waiting for the interest rates to drop and what the house prices are going to do, and here nor there. So my all-time favorite lender that I do the most of my business through, for multiple reasons. Usually they're one of the top priced. They have lots of incentives. Their turnaround times are quick. We're not sitting in line waiting for forever and a day. My closings, gosh, Kayla, how quick was that closing the other day? It was a hybrid closing.
I think we were done in like 12 minutes.
Unbelievable.
Like, and they signed, I mean, gosh, the stack was like
30 pages.
Tiny.
Compared to 100.
Like that. They're usually like that. And I was like, we all looked at each other. We're like, whoa.
Yeah. So it's exciting. But anyway, they try to be ahead of the game, ahead of the curve. And they launched last week that they're basically going to start their own little refi boom. And what that means is they're incentivizing their pricing to be able to take advantage of lower interest rates on government streamlined loans. So I know that's like speaking Chinese to a lot of people, but basically, if you have an FHA or a VA loan currently that you've received, we'll say in the last 2 years, this particular lender is allowing us to take advantage of off the rate sheet interest rates that we're anticipating that to happen. So basically we're doing it beforehand. I don't want to say the numbers that they're giving because that's confusing. It's not, it's built into the pricing. It's not the interest rate, which is a whole nother conversation. Point is that they're allowing us to take advantage of lower interest rates today on a streamline refinance. Streamline refinance means no appraisal most of the time, no income documentation. And when we pull our credit report, yes, we're looking at your credit score, but we're only looking at that mortgage history. I don't care what your debt to income ratio is. I don't care about the exact appraised value unless we're doing something different, as long as our calculations work. And we basically, from start to finish, it should be like we'll call it a 10-day process, and take advantage of a lower interest rate today instead of months from now. They're like, oh, how can you do that? More than likely, they're holding on to their paper, which they service a lot of their own stuff anyway, but they'll hold on to it until the rates do go down. Then if those loans are the ones that they're going to essentially sell package up and give to an investor, they'll do it at that point in time. So they'll hold them and service them for however long it takes. They're probably taking a little bit of a cut on it as of now, but the idea is for multiple things. One, to kind of get ahead of the game. Two, to be able to know what to expect, probably for their internal team to get in the routine of what these streamlines look like, and to give people a little relief early. So if that's anything that somebody wants to talk to me about, by all means, give me a call. It's a very, very easy process. I need very limited documentation. We can do discounted closing cost, and what I mean by that is if you have like your survey from when you closed and you received your owner's title policy, we can do a reissue credit. So it's a minimal expense and a very quick, easy process to get your monthly mortgage payment down now for government loans.
Yeah.
So
okay.
So that was it. So, what's that? So FHA or VA? Yep. FHA or VA. Yep.
Cool.
So it's exciting knowing that that's coming.
Yeah.
They're pretty good. They wouldn't be offering it now if they truly weren't expecting.
They were pretty sure where the rates are going to be in the next couple months. So
yeah.
And the Fed's meeting like tomorrow, I think, or today?
Might be. No, I don't think it's
this
today.
week. I think maybe it's tomorrow. I think.
I want to say 26th, but let's see. I'll look it up real quick. I think it's the 26th.
Well, it's this week.
Is it July? Upcoming Fed meeting, July 30th and 31st.
Oh, okay. So then next week, I lied.
I got
ahead of it, and I was like, "Yeah, we're gonna see something soon."
We're gonna see something. We're gonna see what happens. I'm trying to see when. All right, so 2024.
I mean, the rates have been kind of like creeping down a little bit.
Sure.
Like they're creeping down.
Yeah. The other day, it was a pretty unique scenario, cut and dry. We were in the high fives. High five, low sixes. It teeters a little bit, but within reason. High fives, we'll call it. It was great. Yeah. Mm-hmm. We had good credit. We were putting money down. We weren't buying like a condo or something outside the box. Right, we were using regular income, good credit score, good income history, good ratios. So
that always helps if you're good credit and you're putting a good chunk of change down, like 20% or something like that. I've seen
there's always it's another thing that sometimes happens, like when we are pricing out these loans, and I won't spend too much time on this, but this is the reason that's important, is because sometimes I call it the sweet spot. They're putting 20% down, and the reason that they're putting 20% down is they don't have monthly mortgage insurance on a conventional loan.
Mm-hmm.
However, sometimes because we get a better pricing adjustment for them only putting 10% down, the $30 or whatever they're paying in monthly mortgage insurance means nothing because my interest rate is so much better from them only putting 10% down. Then we go to closing, we can take that additional 10% and then apply it towards our principal if that's what you want to do.
Right.
So there's lots of different ways, and to make sure that, the due diligence is done to make sure that you're offering the client the best options for them. Because if your monthly mortgage insurance is $20-$30 and you're using that money to take that out and not being able to give them a better price for whatever reason on that price sheet, that's the sweet spot, then you're not doing a service to your borrower of at least explaining it and presenting it to them.
Right. And then giving them the option and what makes more sense.
Yeah. That 10%, depending upon your loan amount, it essentially could make you more money than you're paying in monthly mortgage insurance.
Yeah.
Especially if it's only like a small amount.
Right.
But a lot of factors come into that.
Right.
So anyway, I could go on and on forever about that part.
Oh, right. Oh, I know. Well,
That's the
I think we were going to talk about like the mortgage assumptions, but we don't really have to
part.
get into that today because I know that we're a little bit over time unless we want to just touch on it for at least a couple minutes.
Yeah, you've been experiencing it. We had talked a little bit, and I'm not very familiar with it. And the reason I'm not very familiar with it is because I don't I hadn't seen them a lot.
Mhm,
It's been presented as far as like listings on homes that homes have an assumable mortgage,
mhm,
and from my research that I've done, I think a majority of them are some type of government or FHA loan that
yeah, FHA
the
or
client
VA.
existing has, but it's not done on the broker side. So I don't necessarily ever really see, oh, hey, this person is assuming this other person's mortgage, and they're not going to come to me to get approved for it. They actually will go to whoever that lender is, not the broker. Like I can't do a mortgage loan like that.
Mhm.
Whoever's servicing that loan. Um, but I mean, they're pretty appealing because think about it. I mean, you're talking interest rates that were in the twos and threes.
Yeah.
Mhm.
So the the
No.
the appealing part about them is the interest rate. So like I had a listing recently where they had a VA loan and a 2.49% interest rate, and their loan payoff was like around 200, maybe a little less. And you don't have to be a veteran to assume that VA loan, which I don't know, that's weird, but whatever. I'm not going to argue with it.
I'm like, oh,
But so you assume the loan, and then that buyer has to pay either the difference between the actual purchase price and that loan in cash, or of course, if they qualify to get a second loan to pay for the difference. So that would be, I would imagine, if you're getting assuming a mortgage and then qualifying for a second mortgage, that could get a little sticky. And I've been told that those assumptions, it's not like a regular mortgage. Like it's not like a 30-day thing. Like you're
right.
looking at maybe, 3 to 6 months.
Oh,
Depending on the lender, from what my understanding is of it. So if 3 to 6 months might not be beneficial to the buyer and or the seller. It's kind of a long time. But I think it varies. But from when I spoke with my title company, they were saying that, it's pretty much, you're probably looking at 90 days for whatever reason. I don't know. So I guess it just depends on the buyer and seller, and if everyone's okay with that turnaround time. And
I mean, I would
uh,
assume they have to like qualify for it like a
yep,
regular
yep,
mortgage loan. And if there is a difference between what they are assuming and what that purchase price is, trying to find, I mean, if you have cash, then that's a different scenario, but
mm-hmm,
trying to find the ability to come behind that assumed mortgage with a second mortgage, it becomes difficult.
yeah,
We have like, you usually don't do, um, well,
two
nowadays,
at one time.
right. You can. There are lenders
Well,
that
with
will do that.
those, we're talking like, what if
Loans.
we're looking at 200,000 and another 200,000? That's
You look at LTV, how much money they have to put down. Like there's a lot that would be involved in that. And it wouldn't be like, it would actually be a whole second mortgage. It wouldn't even be like an equity line or anything like that. We used
yeah,
to do simultaneous ones, like we'd do an 80% first and like a 10% second, or whatever our capped LTV. Back in the day, it used to be 100%, 80 and 80/20 it was called. Don't get excited. They don't exist that much anymore. But to all the ins and outs of that, like, no wonder it takes a long time because they have to
yeah.
get approved for the first and then figure out where they're going to get the rest of the money from.
Right. And I'm sure that the lender is like not exactly excited about continuing a lower rate. So they
Yeah,
want to
being
make
in
sure
second
that
position
you're
too.
like extra qualified.
Yeah, it's higher
But
risk to be in that second position.
yeah. So I mean, there's a lot that goes into it, but it could work out for the right seller and the right buyer, especially if it's a longer scenario. Like I have sellers that are
Very
like,
appealing.
Yeah. So I have sellers that are not in a crazy rush. Like they're like, okay, well, we don't know where we're going yet. So like we're okay to wait. Then you
Right.
have others that are like, hey, we got to get this sold immediately because we're going back up north to be with our family, or we just, there's a couple houses that we see on the market now that we really want. So we want to get our house under contract and sold so we can, move on. So everybody's scenario is different.
For sure. But kind of cool. Even though, like I said, it does happen. And we've seen it more often. And I think it's because of those beautiful interest rates that we had a few years back. And,
we haven't seen a huge gap in rates this close together in a long time.
Yeah.
So, sure. But I think that's it. We got a lot. We covered a lot. I think
that was a lot of information. So
yeah. Yep.
If anybody has any questions or needs anything, obviously all of our information are on our Facebook pages and email addresses and phone numbers or direct message or however you need to reach us. And we'll gladly answer any questions that anybody has and walk you through the process.
Yeah. Yep. And if you want to get your ducks in a row, if you're looking to purchase or, sell within the next 6 months to a year or even further down the road, then, we're here to help you, put together a plan of action for that and make sure that you're not ready before you're actually ready. So everything aligns. Yeah.
Yep. And for those that are waiting, I know I keep saying it, don't wait. What's going to end, you're going to put yourself in a different situation than we have currently. The house prices are going to be higher. Now, granted, the interest rates might be lower, but there's going to be more people making offers on that same house. It's going to look kind of similar that we did a few years ago with multiple offers on homes. And
it's still happening out there. I'm still seeing it, on the buy side and the sell side. Even houses that have been sitting for like 3 months, I go to make an offer on it for my clients. And the next thing you know, they have 3 or 4 offers. And I'm like, what the heck?
Yeah. We can do temporary buy downs to kind of like wait for the interest rates to come down. So you're essentially having that mortgage payment that you're making now, and then we'll do a refinance to make it permanent, we'll call it. Yeah. So there's many different options that you can do in anticipation of these interest rates to come down. Streamline refinances if we're going government loans, even later on. So now's the time to get in if you're planning on moving and have the ability to, rather than waiting, because I think that it's going to change quite a bit between now and the end of the year.
Yeah, for sure. And obviously, as you said, that, UWM is already predicting that and rolling out this new program. So
they are,
whether we don't know exactly when and where and how and what the number is, but it's going to happen. And you just want to be, on the right side of that.
Yeah, for sure.
So,
all right.
Well, everybody enjoy the rest of their Tuesday. I got a dentist appointment at 3:00 today, so I'm super excited about that.
All right. I don't want a dentist. I had to take Courtney this morning. I do mind 7:30 in the morning appointments. I was like, 7:30? No. So they made it like 8:20. Like that was better.
Yeah. All right. Well, everybody have a great day. I'll talk to you guys later.
All right. Bye.